It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. This morning I'm going to give you the best estimation of what I think is happening. And also, we really need to watch gold and silver because they have hit major spots that we've been talking about for quite some time. I'll cover the silver right after we do the stock market because silver did hit the exact number at $30.50 an ounce. And we'll take a look at that. Gold also hit the exact number. So these are really important numbers that we hit. Basil was alluding to that on his show, too, that many of these things had hit really key support levels, and this is true because if we break these, then that means that we're heading, a lot lower. But at this level, this is where you want to take a look at it. It's much better to buy silver at $30.50 than it is $36 an ounce. So we'll keep an eye on that. First, we want to talk a little bit about the stock market because we're over, this day that we've been talking about. This is a P-index date. We had the new moon on April 21st, and the perigee on April 22nd, which was Saturday. And so what we're expecting now is that the market has made some type of a turn to the downside. We've hit some major support. We didn't even go below, the lows of last week in the S&P. We made the 61% retracement in the Dow Jones Industrial Average, and we need to, take a look at that. Because as it was doing this, we were preparing to see this on the show that we did last week on Thursday when we were doing the commodity show. We were watching the Gartley form up around the 13,140 level, and since that time we've come down. And today's low was the same retracement low and made a beautiful AB equals CD level right at that level. So this is key support that we're looking at that was made earlier this morning. And so we have to, see if that's going to hold. Basil mentioned that the close was very important today. I have to agree with that because if it closes very badly today and closes below those numbers, that's telling us that, we're in a downdraft that's going to continue, for quite some time. It's too early to really tell whether the Bradley model has actually, hitting it, perfectly. It looks perfect right now, but that's only been a couple of weeks. We really need to get the S&P below 1335 or the Dow Jones below 12,700. That's 200 points away. If we do that, then we pretty much know for sure that we're going to be down into July. And remember, one of the strongest, seasonals that they have in the stock market is to sell in May and go away. And the last 3 years, that has actually, worked pretty well. So we'll see if this, in fact, is going to be an influence in the market at the same time. So these are things that we are definitely watching. I know that the stock of Apple has had a lot of play in what's going on in the market, and we've had some big targets on these ABCD patterns that we look at going back to the low of March, and that's the last major low we had in Apple, and that price objective measures down to about 545, 945. Well, maybe it'll be 945 pretty soon. But we've had a big run in Apple since early this morning, and it went down below the 618 at 563. The low was around 556, I believe, and now it's reversing a little bit. And this might be enough to give enough impetus on the market to hold it up a little bit more. But Apple is just one stock. And it's just, still has an objective down there at 542, which I think has a pretty good chance of, making that objective. But we'll have to, just wait and see on this. It's just one stock. It has nothing to do, with anything else. Now, we need to look at the other market that, that we follow quite a bit, and that is the NASDAQ. And if you give me a second, I had an electrical problem right before the show was to start, and I had to come in and redo everything, and I'm not sure that all the charts are going to show up correctly on the last part. I did the Dow charts correctly, but the NASDAQ chart had to be redone again. and I'm able to pull it up and show you that we have reached a big ABCD pattern on the downside, also at the 1.618 today. That's also telling us that we are at a pretty significant level in the market, and whether it's going to hold this level, it's still too early. We've only been open 2.5 hours. The market's been able to rally about 40 Dow points, and that's really very little. But it can accelerate very quickly because a lot of people are still bullish, and they're looking for good places to buy, and frankly, this might be a good place to buy. We don't know yet, but we'll have to wait and see. I do believe that the Bradley model has started to work, but like I said when I started the show, I'm not really sure until we get below that 1335 level that we will be in the mood for a bigger down move. The next thing that I would like to mention is the silver market, because this is something that we've been watching really closely, and I've been, as you know, I follow the open interest and I follow the volume in this, and the open interest is actually held up in silver. It certainly hasn't held up in gold. The gold open interest has dropped about 15% since my last show a couple of weeks ago. But what's happened today is the fact that we hit this exact number of $30.50 per ounce. It's very, very important because there's so much support there because of the ABCD patterns and the Fibonacci number of 618, of course, that's coming off of that. It also makes that a head and shoulders pattern coming off of the September low and the January low and the April low, and the time difference between those is very, very important. So this is a real critical level. If we go below that 30.50 level in silver, that's going to be a very, very bad sign. And but if you're interested in silver, this is the number we've been watching for a very long time, and that's something that you want to keep in mind. But the stop here, if it gets below 30.50, there's going to be something wrong, because this number hit it perfectly, and people have asked me, he says, well, why did it hit it perfectly? Well, the only reason it hits it perfectly is Fibonacci numbers are they're not mysterious anymore. People put orders there, and if there's not much there, an order of 100 contracts in silver can move that market 20 or 30 cents without very much trouble at all. So it just means that it's support. That's all it means. And sometimes it'll break it, by 10 or 15 cents and go above it, but you've got to be able to assume at least a 50 cent per ounce risk in silver now, because that's how much the volatility is in this, and it makes it, very important to keep an eye on it because of the level that it's at right now. Now, we have the same thing that is happening in the gold market. But before I get to the gold, well, I should do gold first. Let me do one at a time. Otherwise, I will be in the process of like everything else that I'll get too confused. And we are at a major spot in the gold market also. But I believe that gold still has a possibility to go down to the $1,580 per ounce level. And the reason for that is shown on the chart that I posted into Tiger TV. And we have a very large AB equals CD pattern, and there's two of them there that come in at the 786. The problem that we're facing right now is that this is the third time that we've hit the 618 retracement in gold. We've hit it in March at 1622. We hit it in early April at the 1622, 1623 level, and today we hit it. It also came down to 1623. It's only rallied $10, and silver's only rallied 20 cents. That is not very much, folks. I mean, that's just can be a little tiny short covering rally, much like what could be happening in the stock market right now. However, if it does hold there, that's going to tell us that we are getting ready, to have something pretty dramatic happen to the upside in gold. If you wanted to be safe with this, I would wait a day just to make sure that this level holds. You might have to pay up for it, but you'll still have to be able to get a chance to be a buyer of gold and silver in here. This is a pattern that you have a series of higher bottoms, you have a series of lower tops, so you're in a real tight pennant. And so we're going to be able to see here if we're going to be able to make it. Now, we're very oversold in the gold market. Well, we've been down 9 days in a row, so that makes it, considerably oversold, which gives it some, bullishness for a bounce. But like I said before, we have to wait until the close to see if these are going to, hold these levels, and that's what we'll be looking at, on a bigger basis. But if it does move, it's going to give you a chance to get in, folks. It always does that. You don't have to try to pick the low tick. There's only a few people that get those, and I've never met those people. So, you just have to, manage your risk the best you can and keep an eye on these things. But these patterns that we're having in gold and silver are what we've been waiting for quite some time here. And, this is what's occurring. Now, we do have one large caveat here, and I want to bring that up, and that is the gold and silver index. We've been talking about that, and we're going to put this up on the Tiger TV. It's the long-term weekly chart of the gold and silver index. And today we gapped down below the 786 level. That 786 level came in at around 162. We gapped down below that. We've been below it all day. That's another reason for caution of what we're looking at here. Remember, this has been in a really strong uptrend since September, October of 2008. And, now this is the first time we've had a really, really good correction, and it gapped down below that 786. So it's important today and tomorrow and probably the whole rest of this week of what happens, because if it does turn from here, that's telling us that we've hit major support in gold and silver, and we'll have to start looking at maybe some of these really oversold gold and silver stocks that have just been absolutely, decimated, like Newmont Mining and a few of the others that are big in there. GLD's also been hit pretty hard too, but that's a ETF. So this is what we're watching in the gold and silver. This is a spot that we've been looking at for a long time, and sometimes God's greatest gifts are unanswered prayers. This might be one of them, so you have to be careful, because if it does accelerate to the downside, it's a major problem. One other thing that we need to be concerned about, and that is that we always watch the commodity index, because of the fact that in 2008 when these things turned down, the commodities were, especially crude oil and gold, turned down, very, very rapidly to the downside. And, what we're doing now is we have broken the 618 retracement several weeks ago, and we talked about that, the fact that it had failed. And what has happened now is that you are still heading down. We were looking at this at around the $28 level as a potential, $28.50. We have to take a little break here to pay some bills. We'll come back. We'll talk a little bit more about this DBA for ETF for commodities, because it relates to stocks. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. If you have any questions, this is Larry Pesavento, 877-927-6648. And we're talking about the DBA for commodities, or the ETF for commodities, and the fact that we did have a Gartley up there at around that 28.50 level. And, once it went below 28, we assumed that it was not working, and it certainly hasn't been, and now we've broken down. We have to pay close attention to these commodities, folks, because remember in 2008, the commodity markets, started following, and then when they started to follow, they brought in a lot of margin call selling from the hedge funds, and, that some of the hedge funds have come back pretty strongly, and, of course, some haven't, but, they still influence the markets by margin selling just like they do in stocks. So we're at critical levels across the board. I did have a question about one of the gold stocks that I mentioned a little while ago, and that is the Newmont Mining. And Newmont Mining has had just a precipitous drop from the big butterfly that we had up at 72. It's dropped over 45%. Of its value, and now we're coming down, we've taken out all the support from 2010 and 2011, and if it's getting ready to buy, this is, or getting ready to be bought, this would be one that you would want to take a look at, because the risk here is not going to be very much, but it's best to wait a day or two because of the gap down that we have here. And so I think that, like I mentioned before earlier in the show, that gold is very strong support at the 16.23. But remember, we're only $9 away, and $9 of gold, it can be a matter of seconds. And the same thing in silver. You know, the silver support at 30.50 could evaporate in a matter of seconds. So we have to keep an eye, you know, on this, because it's important. The next day or two, by Wednesday, we'll certainly know if Newmont Mining and gold have made the bottom. And for, you know, if you don't want to risk very much and you're looking for something for your IRA to buy, this might be something to take a look at, because you want to buy things when they're, you know, cheap, not when they're really strong. And here you've had a really big ABCD correction in Newmont. Down to this 48 level, and we actually hit 45 today, so it went $3 below that. So as long as it'll stay in this area and doesn't completely unwind over the next few days, then we'll have an idea that the gold is finally bottomed. But it's best to be safe. I believe in these Fibonacci numbers and patterns really closely, but when you have really strong trending down moves like we've had this past week and this week, it's better to wait a little bit probably for things to settle down, and you'll get usually a nice retracement place to buy one of these things that we're looking at. But this is what we're watching. We need to take a look at the U.S. dollar index, because this runs a lot of the stuff that we have along with the rest of the Forex market. But today's low was an exact 61% retracement coming off of the April low, and made a nice little AB equals CD pattern during that time. So that completed a bullish Gartley today at the 79.28 level, and that was the low. And we've had a little bit of a rally from there, not too much. Now we've had a little more of a rally in the pound, and at least from the low, and some of the others are still holding up, but we'll have to wait and see. But this is another spot where we have this important number in the dollar setting up here. Now the dollar index itself has a real strong probability, if it breaks this low at 79, going all the way down to that 77 level, and that's the AB equals CD level that is in the longer term chart, and that would be the ideal place to look to be a buyer of the dollar. So the ABCD formations have been holding up really well with the dollar index, as they have with the euro and the pound and the Canadian and the Australian and most of the other cross rates too. But I only follow mainly for TFNN are the major crosses against the U.S. dollar. I don't cover the euro yen and pound yen for the newsletter and stuff very often, because they even though they are traded, they're primarily Forex trading, and I like to look at everything where country to country you can see it really clearly, and that's what at least what my game plan is to watch it during that time. Now the other thing that since we were talking about the dollar, I wanted to mention, I slipped away and didn't get to it when I was in the talking about the stock market. We've got to get back to it a little bit. I want to talk about the S&P futures here for a minute, and 877-927-6648.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. And we want to take a look at the S&P futures. We'll take a look at the E-mini because that's what most of the folks trade. When we had this rally back on the last Thursday, we had a little rally up to that 1390 area. That was right after the Spanish bond thing came out that was supposed to be very good, and then 20 minutes later they realized that it wasn't that good, and then the market sold off. And what we've done now is we've gone down and we've tested the low that we made, back on April the 10th. That's not the low that's important, in my opinion. The low that's important is the one at 1335, which is considerably lower than that. And the reason for the importance is the fact that then it would line up, with a downward moving price in the Bradley model that would take us all the way through July, on the downside. So this is why we're taking a look at it. The fact that the market's rallying today, I've already heard from 3 people that it's all related to Apple, and everybody keeps watching Apple, but it's just one stock. However, it's moving the market, and that's what's important. So we'll just watch and see what happens. Apple still looks like it's got a chance to make the 545 level, but we'll have to wait and see. The ABCD patterns, they don't work 100% of the time, but sometimes in the 65%, which I'll take those probabilities, all day long. Now, we need to get to the interest rate markets because I still think we have a chance here, to make some of our price objectives that we're going to be looking at. which I'm talking about, 149 or so in the the Treasury bonds. Now the Treasury note market, which most of you know is the shorter term paper, 5 years and less. Well, actually, bills are 1 to 3 years, and notes are 3 to 10. But basically, this has almost made a double top up here at the 132 level going back to February. So this market has still got a chance to. It's been in this really big consolidation since August. I mean, really a big consolidation. And since we've been in a 30-year market, actually spent 40 years? No, 30 years. A 30-year market since 1981, that we still have a chance for interest rates to make one more spike to the downside, and that's what we were looking for. And we'll keep an eye on that. And but it looks like the notes are going to. They're only from where they're trading right now. They're only 10 ticks away from the contract high. And earlier today they were only 4 ticks away from the contract high. So the shorter term rates are still going down. So we'll keep an eye on that. But the one we want to trade, of course, is a Treasury bond, and it has today it had a little bit of resistance up here at a 1.618 going back the last 10 days or so. It made a 1.618 expansion of the high from the 16th. That probably held it a little bit. That also gave the bonds a little bit of impetus to the downside. So we'll wait and see if this is going to keep in effect. But I still think we got a chance of the TBT to get the market moving. But we'll have to, like I say, give it a little bit more time. When it was down at 35, just about 3 weeks ago, that was the 382 retracement. It had completed that, that pattern and, broken down, and it was at major support because it had hit that twice. The notes could not make, that a lower low. They could only come to the 786, which was also telling them that the prices for, the bonds and notes were going to go higher, lower rates, and that's in fact what's happened. The question is whether we're going to sell off a whole lot or just a little bit during this time, because we've been up for 10 days in a row right now, and that means it will probably just get some type of correction, and from that level we'll go and see if it's going to make any difference, with this. Now, we need to take a look at the crude oil market, because it also has had a pretty big correction. But there's one other thing in the crude oil market that we focused in the newsletter, and we focused on the commodity portion of the show on Thursdays. I think it was the last Thursday that I worked on, and I'll do that one first because that has a really interesting pattern, and that is the gasoline. The gasoline contract made a beautiful butterfly pattern just about a month ago when we were talking about it, and it was making a double top at that time. And this is in fact what's happened is we've made a big butterfly pattern up at the top, making a double top from last April. If you take a look at this chart in Tiger TV, if you get a chance, for gasoline futures, it's a really interesting one because it has some beautiful harmony in it. And today's low it's trading right about at the 786 retracement off of the end of February low, and it came in and it filled that gap that was there, and it completed an AB equals CD pattern, making it a bullish Gartley here. So we are expecting, a rally in gasoline prices from this level. So if this is the case, that means that we'll probably get a corresponding rally in the crude oil. And the same thing happened in crude oil today, as we had the same type of a pattern. It didn't come down quite as much as the gasoline prices did, but remember, gasoline prices went up much faster than crude oil did, so that's to be expected. So we want to watch the gasoline futures right where they are. I mean, so many of these things are at critical level, folks, that it's just you could flip a coin And if they close really badly this week, it's going to tell you that something really major has tripped, and it could be the fact that this index date the P index date that we had today, combined with the new moon and combined with the perigee and the Bradley date, all that might be the things that are calling it, but we don't know for sure. You have to get corresponding, weakness, to break some of these support levels, and then you'll have a pretty good idea of where you are. But you remember, you've got to get confirmation. That's one of the things that Basil preaches all the time, and I have to agree with him 150%, because it's really the case that we're at real critical levels in so many of these things, and they've been bullish for so long that it's really it's an important spot to take a look at it. Now, I'm going to put the chart up for the crude oil just to show you the fact that it has been much more orderly on the downside than the gasoline. Today's low in the crude oil was only a 786 retracement of the low from last February, and we made the 786 retracement in the gasoline. So both of these have held up at a relatively strong level. So all of these numbers are coming together. These patterns are, all the numbers, everything is here. I mean, it's just one after another is lined up. Gold, silver, crude oil, gasoline. It's just really amazing how they're holding up. Now, the DBA is breaking down, and that's because of some of the other soft commodities that we have, like sugar and coffee and cocoa and cattle and things like that. But the grain markets have held up very well, and some of the factors, corn and wheat, have still been up today, and beans were up earlier, and I haven't checked them lately, but those have held up relatively well. So we're at a real critical level across the board on all the commodities, and it doesn't take very much to turn it to the downside, and of course it doesn't take very much to turn it to the upside also. So that's the major theme of what we're looking at today, is the critical level of all of these things, that we're keeping an eye on. If you have any questions, it's 877-927-6648. Someone did ask me a question about the P index date that was today. That was only 3 aspects occurred on today, and that basically means that as you look up if you were look at a transit chart, you'd see only 3 major things that were, in fact, these are actually minor things that are occurring, and that usually means that there's like a magnet there, and then after you go into the next day, whatever happens, it will start to accelerate. So we'll have to see if the acceleration is going to be to the upside or to the downside, but we should have a really big day. Well, we said that we were going to have a big day, on Thursday, because of the fact that we had all this stuff going. Now, whether it's going to be a significant low or not, we're not sure. We're just saying that it hit all of these numbers, right on the money, and so you just have to be able to, keep an eye on the fact that, that's what you're looking at, is you're just looking at those. As I look at gold, and I think that's the one that trades better than anything else, it's only, $9 off the low, and it can drop $9 in a matter of a few minutes. So you've got to be able to, keep an eye on these things, and we'll see if this is going to be the reason for the market turning down, if these other commodities turn down. I hope I don't sound like a broken record, but these things are interrelated, folks, and the reason why is they keep score with money, and these hedge funds and mutual funds and also our own personal funds are tied up into commodities and the stock indices and in the forex trading. And when you get hit in one area, you have to lighten up in another area, and that causes the margin call selling that occurs, and that's what makes these things, move the way that they move. So you've got to be flexible, pay attention to the support and resistance points. And, that's really the thing that we're doing. We've got several hours to go. We got 3 hours to go in the trading today. And, so much could happen because we've only been going for, 3 hours so far today. So we're only halfway through the day and nothing dramatic has happened. The Dow's only rallied, about 40 points off of its bottom. Gold and silver have rallied very little. And so, as we're on the air here, we might be breaking the low in silver. I noticed now that it just sold off down to that 362 area. So there again, it's only 12 cents away from the 618 level, and that's going to be real interesting because, as you know from looking at these numbers and patterns over the past weeks and months and years, that when they do hit exactly like we did in silver, we hit the exact high back in late February, that 37.68. That was the exact high of the 618 retracement. That tells us that we're at a major spot, and that's the thing that we have to really keep an eye on. We're moving down in silver as we're talking now. I happen to keeping that up on my monitor because I have a really strong interest. I haven't bought it yet, but I certainly want to. I probably will wait one day just because of the gap, but that's what we'll be keeping an eye on. Okay, the next thing that I would like to bring up is that someone had a question about the Bradley model, and the fact that I mentioned the fact that someone in China had done a lot of work with the Bradley model and putting it over the overlays on the foreign markets, and it does have the same high probability of turning or telling you what the market's going to do in the foreign markets, just like it does in the markets for the U.S. markets and Europe and Asia, and but when you get to small markets like Egypt and things like that, it just doesn't fit very well. And the reason for that is you don't have any volume, and you don't have any you can get volatility, but you don't have the volume and you don't have the capitalization there, to really make a difference. And so this is why you want to keep an eye on these things as far as what you're looking at is not 100%, but it gives you a really good idea of what the stock market's going to do. And I'm talking in the neighborhood of about 70%. And if you can get a 70% odds in something, you've got a good odds. So that's all we're looking at here, and that's basically the bottom line of what we try to do here at TFNN is to give us some pretty good instruments to look at. Now, I'm actually watching the silver market right now. We're back into the 30. We've broken below 30.60 now, so we're going to be real interesting what happens here because these things are so interrelated that it's going to be quite amazing to see if they're going to hold up or this whole thing is going to break down. Because if we break down in stocks today and we close below the 1350 level, to me that tells us that 1335 is going to be the next level in the S&P futures. That'll be around 12,600 or 12,700 in the Dow, and then that'll tell us that we've got some serious problems going on, and then we'll have to wait and see. The next key date that we're looking at, I believe, is not until May the 4th, and there's a whole lot of little ones that come in between now and May the 4th. This next week has just got a lot of nice geometric patterns, that fit together, and that's what makes this time frame so very very important. Frankly, I haven't seen it set up any better than this in quite some time. When you look at the Bradley model, we compared this to what happened in 2009. This is pretty much the mirror image of it. If it's going to be the mirror image of 2009, I'm not sure, but I will say this: I'm as bearish as I was bullish in 2009. That's all I can tell you. We've got to take a break here, and then we'll come back and finish up. We will 877-927-6648.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we want to take a look at the copper market because we've had a pretty substantial break from $4 down to the $3.60 a pound level. And what's interesting is that over the past 5 days, we've not been able to rally at all. And when the stock market was doing the little bit of a rally that we had in the Dow over the last few days, the copper market could not even move very much, and now it's reversed most of that, doing pretty much what silver and gold have done also. So that's another indicator here that there's a possibility that we could be breaking down in the commodities, but we have to give it a little bit more time. One other thing that we need to check and that we followed before, and that is the The banking index, it's been hitting these numbers on the Fibonacci sequence extremely well. Back in September, we made a perfect 61% retracement, which was a, bullish Gartley pattern back on September 27th. And then on the high back in March, on March 19th, we hit the exact 786 on the banking index at 50.91, and we backed off about 5 or 6%. From that level. We gapped down today, but the gap is not very much, and it's still real early in the day. But we have to these numbers have held up. Now if it goes above the 786, then everything's going to be a swell in Camelot, and I'm going to be wrong. And this is the name of the game. But right now the banking index looks like it's getting ready for a pretty good correction. Remember, we had 2 lower highs up there, so that was another thing that was telling us we were in a downtrend when we got to that Gartley sell pattern. So we need to really, really watch this and keep an eye on what's going on. Now, as when we started this show, I talked about the silver, how important it was at that 30.50 and how important the gold was at the 16.32, and gold at 16.32 an ounce is where it was trading when I started the show. Yet silver has backed off more than 25 cents an ounce, and the reason for that is it's a lot more volatile than the gold market, and I think that the reason for that is there's less traders, so that volatility it shows up by lack of liquidity. In other words, the difference between the bids and asks, and that's what I think is happening. So, we'll have to wait and see. But the importance of this 30.50 level in the silver today, I think, is important. Just like most of the things, that we've been, talking about. And I'm just repeating what Basil said, on a lot of these things. We're at real critical levels here. And, we'll wait and see. Now, irregardless of what happens, in Europe, we've talked about, all the bearish patterns that occurred there just a few weeks ago, back in, I think it was late March, when we were completing all of the bearish Gartley patterns in the DAX and the French market. I can't pronounce it, CAX or something, and then also the DAX. All of those hit, 786 numbers almost perfectly. The same thing happened in Asia. When I happened to be in Asia, they were making some beautiful, Gartley patterns to the downside after a 3-week correction, and the market rallied a good 5 or 6%, exactly to the 61% retracement yesterday in the Hang Seng Index for Hong Kong, and then it sold off, well over 400 points from its high, which is better than 2.5%. So these numbers are hitting pretty good. We're at real critical levels. Tomorrow I won't have a show, but I will know by Wednesday whether these levels are holding or not, and whether we have some really good opportunities, to catch some, at least short-term bounces, to the upside and some of these gold stocks. And that's the main thing that. If I had to buy anything right now, I'd be looking to buy gold stocks for a short-term bounce. Well, the clock on the wall says it's time to wind it up. I want to thank you all and have a good day, and may God bless.